Hi and welcome to my weekly outlook. This is Kim speaking on Monday the 30th of April. So of course we've got non-farms etc. coming out this week, but let's have a look and in a bit more detail what fundamentals which may affect and create some volatility throughout the week. We've already had the German retail sales, which came in disappointing. We've got the German inflation data, which is pretty much mopped up now. We're just waiting for the 12 o'clock number. But the individual numbers look like they came in lower than expectation. So again, we may see a bit of softening there. So this is not helping the situation and the expectations for growth. But we've still got some more numbers coming out this week, which may see a little bit of change of play in things. Looking further away, then there's little rest of today that I'm really interested. We've got the US core inflation data coming out there, price index due out. I'm just looking at what it was before. It's not a great mover anyway, but change the price of consumer goods. I don't know what I'm looking at that for. It's 130, of course, full. Just talk to myself politely there. So coming out 130, personal spending then. These are important numbers in terms and may create a bit of volatility in terms of whether what we're seeing as the headline growth is actually working through to the consumer. Now we obviously seen in Germany it's not in terms of retail sales there, but these sort of inflation figures and personal spending certainly are drivers for the US economy, more so than perhaps the German economy. Looking forward then to tomorrow, we've got the Reserve Bank of Australian rate statement. That could create some volatility. I'm not expecting too much from it in terms of any surprises, and nor is anyone else from that point of view. That's probably why I'm not. And then we've got a French, German, Italian bank holiday. It's Labour Day for much of Europe, and that may just result in quite a flat old trading morning at least. Things may pick up as we've got London and US markets in the afternoon, but we'll see. But important data are there in the morning anyway. We've got the manufacturing PMI data coming out at 9:30. That's a key one for this week on Wednesday for UK wise. Reserve Bank of Australia is sitting at a dinner. I'm not too fussed on that, but that could still create some volatility mid-morning there for the Aussie dollar. Side of that, ISM manufacturing data, as with the UK data, quite important out there at 3 o'clock. So two numbers there. More as we get into the week, a little bit more significant. Construction PMI is a lesser of the numbers. It may come off a bit softer for the pound anyway. But particularly looking at the GDP numbers and things like this, I would expect that to still be soft. Flash GDP for the Eurozone, it doesn't really create much volatility. ADP non-farm payrolls, is starting to give us a little bit more buzz again in these markets, but not significant. Crude oil inventories, again with the way that things have been moving with the oil price, I would watch that a little bit more, particularly trading oil. FOMC statement, that's obviously very significant there on Wednesday, very, very significant. Expected to stay the same on this occasion, but we should be watching for further comments. There's no speaker this time, so it's very unlikely it will change, that's for sure. But the statement itself is important in any changes of the word, so watch out on that for Wednesday evening. Moving through then, and I'm just looking here, bank holiday for Japan again. Two bank holidays this week. They have a great time, don't they? And then we got moving forward. I'm looking through most of these services. PMI UK is significant, and that is the biggest part of our GDP numbers. So be interested to see if it's continuing to slide or whether we see a bit more pickup. In fact, a lot of the figures had been okay, but it did slip back in April. Slightly lower in Feb, so you see why the quarterly numbers probably weren't particularly good on GDP. Flash estimate CPI, these can create some volatility at 10 on Thursday, but not significant numbers in real terms of the market. And then we've got the US services data coming out, or non-manufacturing coming out at 3 p.m. Thursday. So again, a bit of volatility expected around that number. Finally, on Friday, of course, the big number of the week, second to its federal funds rate, of course, but that's not expected to change. But this certainly is the big number of the week in real terms here, the non-farm payrolls. All on its own, there's no Canadian data out at the same time this week. Theirs will be next week, so nice clear trading there. Looking at, again, the average hourly earnings is a key thing here. It has come in line last month. Previous month it had fallen a little bit. There's a little bit of ups and downs there, but anything more positive there would give the dollar even more strength at the moment. That aside, we've got a load of FOMC speakers later on after the main London session here. Yes, they can create some volatility whenever they speak, but it'll only affect those swingers out there, I would say. Okay, that's pretty much it for the fundamentals for the coming week. Now what I'm going to do now is look at the technicals. I do just need to check something because we are in a short in our trading room at the moment on this euro. That's fine, just checking. Okay, and I'm just going to be coming to the weekly here. So from a weekly aspect here, the euro dollar, it still looks weak. I mean, last week it closed outside of its bands there. It does look like it's got potential down to that weekly 50 at some point, that's for sure. It's shorter term, well, I was looking at this sort of daily 200 as a potential target here. We do have the weekly weekly pivot above us there. There is the potential that we may get a bounce at some point off from this move here. Certainly technically there is. I mean, we've started to sort of stretch off a little bit there. Generally I'd expect maybe a bit more of a bounce, but we saw it off of Friday's weekly pivot, off the weekly pivots from last week, bouncing there. It'll be interesting to see what, well, I say the weekly S3 that should be. It'll be interesting to see how it progresses today. Okay, let's push on through here and look at the data in terms of the sentiment on this currency. Retail sentiment's quite flat on the Oanda and other brokers I've been looking at this morning. In terms of the retail here, it's still positive, but the net positions overall it's a little bit less bullish than it was, but it's interesting, it's still pretty bullish there in that respect when the market's dropping quite as much as it is, but that's how it often happens. From a dealer aspect, we've seen the net, their positions, which they're the other side of the market, inverse to the market, fall a little bit here, which suggests somewhere some of the long positions are coming off. Certainly not on the asset manager. This is more like the pension funds, still relatively bullish. Short positions barely increased here, so net position up in terms of what's going on there, but the other funds certainly quite a bit off here. So it's the hedge funds, etc. The more aggressive funds are certainly down, and the net position is falling quite significantly over the last week. So really just going with the trend here by the looks of things, following through on the trend. There isn't that sort of counter trend maybe, but perhaps asset managers are maybe hedging some positions there, or their overall holdings a little bit maybe. But for now, as I say, the more aggressive traders have broken down. Right, let's. I'm going to just move across to the pound next on this. Let's look at the technicals for the pound next though, and see where we're heading. Now I'm just going to bring the weekly picture in, and well, we're just bang on from a weekly perspective. We're just sitting there right on this trend line here. It'll be interesting to see if it can hold. If it starts breaking, that's much more significant overall in terms of what may be going on here. And again, we've got the weekly 50 sitting below us there, and it may just be the draw. From a daily perspective, okay, it's looking weak already. Again, as with the euro, we've got the weekly pivots above, so any consolidation in the earlier part of the week, we may see price come back towards that. Of course, if there's some real bad US data coming through, we could see it quickly spin around. It's not moved massively away from these sort of levels. They're still well in reach. But again, as with the euro, we've got the daily 200 to be looking at below. So technically, certainly looks weak still. From a sentiment point of view, let's just bring that back into play here, and we'll start off looking at the overall picture from what the dealers are holding. This is the inverted positions. So they've dropped their short sort of holding there, so that's suggesting a little bit more likely that the people are realigning positions, and you can see the long positions starting to increase, so people are starting to get a bit more shorter on that. That would suggest asset money still bearish here overall. In fact, the net positions edged up or reduced slightly, as we saw a little bit more long side in there, but the more aggressive traders, the hedge funds, etc., certainly a drop off on those long positions there. They've closed out, I say closed out, but they've certainly reduced their long holdings here, and net position come down quite a chunk there. So there's possibly more expectations of further downside from these traders. The retail market here, often wrong, but well, still erring on the bullish side regardless of what the market's telling them technically, but maybe a slightly bigger growth. I mean, there's a slight edge down there and a slight increase in the short position, so maybe switching around a little bit. Maybe it's time that these markets changed a little then. Okay, that's the pound, so looking weak. And of course we've seen in more recent news on the fundamental point of view, Amber Rudd leaving, so there may be some more changes of cabinet, we'll see, and that again can disturb the currency markets quite a bit. Dollar yen, weekly perspective here, bullish, run into that weekly 100 there. Next point, wherever it can get through that, there's the weekly 50, weekly 200, but I mean it's that weekly 50 still heading south, maybe coming down to meet price. Does look like it could edge up there. Bit of consolidation towards the end of last week. Didn't really have the legs to push up there, but I'm looking from there here on this monthly basis, monthly pivot basis, it could edge towards its R3 there, and that daily 200, so certainly has the potential at this stage. Fundamentally, I say fundamentally, sentimentally, get my things in the right order here, Kim. So from the sentiment perspective, well, now remember this is the yen dollar, so it's inverted, and the short positions are starting to increase. Obviously, I say obviously, but the retail market is certainly going for the short side of the yen, which would suggest that the yen's going to push up more, so that's fine. Let's have a look at the dealer point first. So dealer, well, it's not held anywhere near the sort of position, still net reducing here. Little asset managers they're sort of more bullish view, just increasing slightly, so more of an increase there. And the leverage side of things here, well, that's still expecting a bit more strength on the yen against the dollar, so we'd expect it to be dropping down there, although just short positions increase, so not massively significant. A correction there, and the net position almost flat really in real terms, so no great conclusions to be drawn from that. Not a lot of change really over the week. Aussie dollar, now this is one I'm struggling with in terms of the large bullish holdings from the retail side of things here, which is it just goes against what where you would be looking, and there are some divergences kicking on the shorter time frames here, but it's broken and it closed below that trend line last week. It's still looking quite soft. It didn't really make much of the higher oil prices, etc. It's I've said for a long time, in the main it's been one of the weaker currencies out there, and it's at the moment it's following suit. There's possible potential for some daily divergence on this market as well, but and like with the euro and the pound, it's got the weekly pivot not too far above it. So if we do see any reversals, there's a target point for it at least. But I really, as I said, I struggle with the sentiment that's so bullish from a retail side, from on the retail brokers, as opposed to looking at the futures here. Now it's quite interesting here. The futures on the it's quite the opposite way around. I mean, they are. I mean, and that, perhaps with this type of retail trader in this type of market, perhaps they are just a bit more. They tend to follow the money a little bit more, and you see that's bearish. Now, if I look at the sentiment from Oanda sitting here, and there's 72-73% of the long on the Aussie, which it just suggests to me that the spot market at least. There's a lot of sentiment suggesting a positive change. Could be right at some point, but I think they could be losing some more money where it's moving technically at the moment. Swing traders may be in for an early one, and as I say, there are some signals, and I can understand it. Overall, looking at what the big dealers are doing, they're holding the long position, so it's pushing up there on the longer side. So that's suggesting the market should be short from that perspective, and yeah, I mean, we're seeing even the asset managers there increase their short side of things to a degree here. It's a little bit, well, certainly the sentiment's changed here, and it's the short side even for the more aggressive traders now is increasing, although so did the long side significantly from the previous week there. So maybe some hedging, but perhaps it's time for a turn according to the more aggressive traders. Okay, that's the Aussie dollar. As ever, as I said, the retail traders eventually get it right, but it normally costs them a lot of money and a lot of chances to do so sometimes. Okay, weekly Canadian dollar. Well, it's sitting right up its upper bands there. It never really pushed much beyond that. It has still got the sort of the higher low, higher high sort of picture on this weekly picture going on here. We did see oil help out somewhat, but it's consolidated last week, much the same way as the yen has here. These sort of, I mean, the yen is one of the most significant traded currencies out there, but it's still managed to only chop sideways. Canadian dollar is a much lighter volumes traded in it, but it's following the same sort of route, and not giving us a clear direction here. If anything, it's softening some more sentiment against the Canadian dollar. So a quick look at that. If I can just get the button on the right button, there we go. So this is, as I say, inverted to what the charts would be normally. And start from the dealer perspective here. It's just working order. The dealer's perspective, they're starting to get more short positions there, but the longs are not really disappearing at the same time. It's just flattening out here. And this sometimes when you see this the switch of flattening between the zero line of net positions overall, we see a change in direction of the market, so you just need to watch for that. So the asset managers still holding towards the long, so still bullish on the Canadian dollar here, although there's some net the net position dropping slightly as some shorts come into play a little bit more. The hedge fund side of things slipping off on the shorts here, just reducing, which if they're coming off on the shorts, well, we may see that gives it more chance of a stronger CAD maybe, which again technically would suggest downside, so just watch carefully for that. And with this consolidation of movement here, it could just tie up. Okay, that's looking at the main currency pairs. What I want to quick look at, of course we did this last week, is look at oil. I get quite a lot of requests for oil, particularly for one Canadian trader I know with the name of Derek. Oil's been really edging its way up there. Donald Trump a couple of weeks ago suggested it's overpriced, and there's no real follow through I've seen on that so far, and it's certainly not moved too much. One thing it hasn't done is shoved up too much. Of course, it isn't helping with the tensions again in the Middle East, and it leaves it stranded up there, despite the fact that there is shiploads of oil apparently sitting there still tanked, and the stocks are high. We'll see later on this week, but at the moment I'm looking at this, I can see the divergence across on the weekly picture, and when you start coming down, it's from a daily picture. Well, there's some lower highs coming through, lower lows just, and I should imagine a shorter time picture is just looking like it may just be topping. There was some sort of divergence between the highs into those absolute highs from the week before. Last week it's just putting lower highs in, a bit of a wedge pattern maybe. If it starts breaking, pushing back up, well, we could see the depth from the high to the low there, the recent light pushed up, which or targeted, which would probably be pretty much into that monthly R2 area. But as I said, to me it looks weak. There's potentially, from a fundamental point of view, the potential for it to roll over. Yes, OPEC etc. would like the price to be higher, because if they can get $100 a barrel as opposed to $50 a barrel, it's a much nicer world. They don't have to pump so much, and they can still get the same money. Anyway, looking, as I say, erring on that weaker side to me. We just need to watch for any bounces off of that daily 21 maybe, but otherwise I think it's looking soft, at least, or softer. And as ever, people like these S&P futures. Let's have a click on the futures. Let's look at the weekly picture first, and it's still really in that consolidated phase. Last week I was really quite bearish on it, and it did chop down there initially with some big old days. Tuesday popped down, but it's held its own, and there's been some good reports coming out the markets have quite liked in terms of company results. So maybe it's just going to push up further back towards that upper trend line there, towards maybe 27-25 even. It could run up into that sort of territory if it breaks through this daily 50. At the moment, as I said, the follow on looks that way. It's still in this big overall weekly wedge, and maybe, as I say, a bullish slant on my analysis at the moment. Okay, I mean, that could be changed significantly with non-farms, but that's not until Friday, and at the moment the markets are joyous. So on that note, I shall wish you a great week. Bye for now.